Okay. So, what are markets made up of? And I'm going to assume from the get go that we are starting from the absolute basics and we know nothing of trading. And this is where I will start from. That there are buyers, there are sellers. In our case, there's hodlers and there's market makers or liquidity providers. Market makers has gotten a bad rap in the forex markets in terms of being treated as the boogeyman, but really there is no market without market makers because they supply the liquidity for which markets work on. In our case, in the cryptocurrency world, there's a few market players you need to be aware of. Number one is miners. So if we're dealing with Bitcoin, they are mining Bitcoin, and for their business to operate, they need to sell Bitcoin. So there's almost a constant sell pressure from miners. Then there's whales, which are really just large holders of cryptocurrency. We're going to say from now onwards that's about over 1,000 of each coin of the larger cap coins. Exchanges also have to buy Bitcoin because they would probably be first in the line from the miners. There are funds that are involved in Bitcoin and others. Some institutions, not major ones, but there are ones. And then there's us right at the bottom. We are the speculators, and generally, when they say retail, it means the bunch of people that can't really move a market by a few trades. Where do we start? That is often how we look when we want to start trading. And once again, it's the simplest thing is to understand how a market actually works. So there are buyers, sellers, and then in an exchange, simply a matching engine. Ultimately, what it comes down to is where there's agreement on a price, that trade happens. It's very similar to normal life, where if you're selling your phone, somebody agrees to buy it at that price. You sell it for 4,000, they agree for 4,000. That's the equivalent of a trade happening. So now you can go and make millions. And we will all know that it's not that easy. It's simple, but it's not easy. And we really need to figure out, firstly, what gives us an edge in the market. As the older dog go, we watch the smart money. But it's very hard to know what the smart money is doing most of the time. I'm sure most of us have been caught on the wrong side of a trade where we are long and the market just tanks for that day. Which makes one question, how do we win? It is possible, but it's not always by looking at the chart. And these are the few things that I've learned along the way. If you are disciplined or willing to discipline yourself, you will, in the long run, win. If you're patient, which means you're going to have to try the same thing over and it might not always win, but it will pay off. You're going to have an open mind because everything in life teaches us about how to work from a point of certainty, and markets are never certain. I know that's not a very clear statement, but we tend to believe that when everybody wants the market to go up, that it will go up. And that, I'm sure we've seen, is proven never to be the case. Or sometimes it is. 2017 was one of those examples. I'm not sure if everybody was around then, but Bitcoin pretty much almost doubled in value every day. And even ended up nearly $20,000. So I'm going to go to charts soon. I just wanted to start on what to me is a base level you need to understand of how charts work is by understanding price action. We need to be able to identify a support area, and that is basically an area where price seems to congregate while coming down. It seems to stop somewhere. Resistance is the opposite, obviously, when we see a chart going up again and we see it seems to sit around an area, it's an area of resistance. Trend lines help us to determine whether a market's in a bull market or a bear market. Time frames are important because you can determine that you're in an uptrend and be looking on a 1 minute chart, and that doesn't necessarily mean that the market is in an uptrend. It just might look like that. So let's go to the charts. This is a Bitcoin versus Tether, and this is Binance. So this is pretty much a plain chart with volume at the bottom. If anybody asked you today, okay, should we go long or short, how would we know? And I would say it's impossible to say. It's just you need to read the market and sit around and figure out what's more likely. And to do that, we're going to have to understand quite a few things. So price action is based on the fact that we're looking at how price is behaving and making decisions of that. What I usually do, and we need to get the horizontal line, is that if we not minimize, but zoom out a bit and look at these three, and we get the horizontal line. So we can take a look and we can see that price seems to respect that level. See that there, broke out there, but still came down under. So if you look at the price there, I would say that that is actually just 10,000. Yep. So that's a bit more. And that's a huge psychological level also. It has obviously gone up there and has never been able to break up there and stay up there for since May. And before May, obviously. We are near an hour long chart. We can go to a longer period and see when last 10K was breached and lived above there. And we can see there 2019. Let's just zoom in a bit. If one looks at it like this, Bitcoin doesn't seem to want to stay above 10K. So if we know that, maybe it would be good to sell Bitcoin when it hits 10K. I'm not saying that specifically, but it has worked out for most people. Also, one must be careful for what they call a double top now, because now we have a double top going there, 10K, 10K on the daily. So we've also, that's 2020. For most of the year, you can't deny that that is a bit of an uptrend. So if we draw a trend line in there, and let's just zoom. So the rules of the trend line is we start at the bottom and we can decide if we want the wicks or not. And it has to have a few touches. We have now clearly seen here it's broken below the trend line, so I don't really know if we want to hold that one as relevant, so we're going to delete that and zoom in a bit. Just have to pull it across like that. And we make that so it's more in view. I don't want that wick into the volume. I hope I'm not going too fast here, but so the longer period we go to, the better this works. So if we draw a trend line from that point and that top there, we'll see that here it starts to respect that line, so we'll hold that as valid. And if we draw another one, you have to just click it there. Okay. I normally just go to the weekly and see how that is panned out. It is always good to look at the longer time frames because they paint a better picture. So on the overall longer trend, when we have a trend line like that that has been poked through, poked through, poked through, and now we're living above it, that is also a bullish sign. The problem with Bitcoin is it's got a lot of things going on at the moment, and I don't really want to delve into that right now. Needless to say, until we get over 10K and stay over there on a weekly, we don't really want to be long right now. Go back to daily. And let's just see if we can delete all this. I want to point out that sometimes when we draw these lines in, we can start to see things we're not supposed to be looking at. And if we also look at here, then we'll see that within this range, Bitcoin's been stuck since 30th of April. And that's not a bad range to be trading. So we can see it literally goes up there, comes down there, up there, down there, up there, pokes through. We'd obviously now expect it to come down here. So I would say buying at this level, 8,600 to 8,500 is a good thing. We'd expect it to go up there. That's quite a stretch for price. And it's always good to, one can really only see this after the fact. One never knows when it's going to be doing this. So this is what they call the market structure would be consolidation on the daily at least. We can go back to hourly. It just looks bigger. Sorry, mouse is not working with me. Yeah. Have to click. Okay. And as you can see, when our 10,000 mark and our 8,300 mark looks much bigger on the hourly. We can then, in the hourly thing, also find a range of working within. You have to know what is happening. So if we once again pull a horizontal line and we look for areas that it touches regularly, and we can even go a bit further down here, we see here there's congregational price there. So let's put that horizontal line in. And we go into history and see, does it respect it? It's not an exact science, but so I would say on the hourly, this area of price, 9,056, round about there, essentially just 9,000 is a big support area. Once again, if we determine that we want to go long, maybe that's an area to buy in. We can go even smaller and go into a 30-minute chart. And generally, these type of areas are what we call support. If you look here also, there's a bit of a big volume bar. Now, I'm not going to explain volume right now, today at least, because that's a bit more advanced. But you really wanted to fall and see volume come in, we then know that is a support area. And that is not always easy to see at the time because you need to have a level from which you measure from. I am fighting with this chart too much. I'm actually just going to go to proper trading view. Let's just switch all those off. So we were on a 30-minute. We can just change this to Binance. There we go. Once again, so we're going to pull in horizontal line. We see that if we draw that in now, we can see prices right now at an area that has been respected quite a few times, even on the 30-minute. I look here and I see that's an area, and we just have to do this all the time. What I tend to do is I leave those lines as I go on trading. If I go to an hour, you can see there in history it has behaved around there. And what you really want to see is multiple touches on this area. So we can start to have a view of the market and see when it goes down, it is supported there. It is a good time to consider going long. And these are short-term trades. They are not long-term. As a hodler of Bitcoin, I tend to permanently be long, and that means at spot that I have certain purchases of Bitcoin that I just will never trade. So if you're buying Bitcoin and holding, you are actually permanently in the long position. I don't recommend that people take the investment side of Bitcoin and trade with it. And there's a few things you have to consider when trading Bitcoin is that are you interested in making more fiat or are you interested in growing your Bitcoin? In that way, if I decide I'm going to make more Bitcoin, then I'm using Tether to short Bitcoin. So even if it's not a margin trade, if I go to Tether at this point, I'm essentially selling Bitcoin for Tether, and I'm going to remain in Tether. And let's say I wait till Bitcoin comes down here, I then buy more Bitcoin with the same amount of Tether. I've grown my Bitcoin. If I am growing dollars, it's pretty much the opposite of that. So, but the same actions, because if I sell to cash there or Tether, buy there, and I sell out there again, I've made more dollars. If I have bought Bitcoin there, yes, dollar wise is going to increase, but the Bitcoin remains the same. So if I'm interested in making dollars, it's just a different way of looking at things. I only saw this. Does everybody hear me? There certainly is sound. So, John, I'm not entirely sure what's happening on your side, but it is working from my side. Okay, so is everybody clear on what support and resistance means and how to practically find it on a chart? You can drop a yes or no in the comments. Well, I'll assume from silence that everybody understands that. We will move on to trend lines. Now, Bitcoin is a bit of a beast, and it tends to plunder through prices and just come back. And I mean, this is a chartist nightmare. So, what do you do with something that goes up to 10,300, comes down within the same day, and just plummets down there? And a large part of the problem of Bitcoin or the Bitcoin markets is what they call illiquidity. And you can fight with me and say, yes, there's billions in Bitcoin, but there isn't billions in every particular exchange. And Binance has one of the higher liquidity marks, but that doesn't mean that there's a buyer for every seller. And especially with the margin trades, and I know this is going to be a bit more complex than simple trading, but if everybody is long on margin, meaning that they have taken borrowed out funds and traded Bitcoin, and unfortunately in crypto we have some real cowboy traders, and their accounts can't maintain that leverage, or at least the balance in their account can't maintain a little knock against them. They get liquidated. And if there isn't buyers on this side, we just get this massive drops. And generally, I, I don't want to badmouth, but we have to blame BitMEX most of the time because there's some really cowboy people, and the matching engine in BitMEX and their platform is not exactly always stable. It tends to freeze when these massive spikes come. And the problem is, we then, who are trading outside of BitMEX, the price can't be at a massive discrepancy at another exchange. So, what I presume happens is that there's algorithms that determine when there's a massive move, it has to react on the side as well. Obviously, it has to react very quickly because if there is a difference, a massive difference in price between, let's say, BitMEX sitting up down here at 9.5 and Binance is at 10,138, traders are soon going to find that loophole and take advantage of it. So the crypto markets over multiple exchanges are becoming a lot more efficient at maintaining a balanced price, for that matter, in the US markets at least. If you look in the local markets, you'll always see a discrepancy in the RAND price versus the US price. That's actually a good thing for us if we can learn how to take advantage of it. But anyway, so these moves don't always mean whale activity. They just could mean liquidations in the futures market, and it's affecting the spot price. This is not what we want to trade because that's not predictive. That's impulsive. And for beginning trades, we want more sure things. So I want areas that have been repeatedly touched, and it's more likely that when it touches here again, it's going to bounce up again. And then let's not be greedy about it. Why do I need to jump into a massive move if I can trade from 8,700 all the way to 9,300? And if we consistently do that, in the long run, we are going to be making profit. And it's just a matter of waiting it out. Now, if you were like me in the beginning, every day you wake up, I want to place a trade. And that is a surefire way of probably losing money. And I've been trading for the better part of 13 years, I think, give or take. And 10 of those years I was consistently losing. So I know what I'm talking about. I'm just a stubborn soul. The sound. Okay. Anyway, so in the crypto markets, I find going lower than the hourly is not really for novices. And this is the kind of chart that you need to be looking at. Pretty plain, not a lot of indicators. We will be jumping into indicators in next week and the week after that, and how we can confirm the behavior by looking at other things. But right now, if we can just understand that price is a construct of human decision. So, and yes, it might be algorithms trading it, but we agree to buy at certain prices and we agree to sell at certain prices. And when trades happen, it's because of humans deciding that things. And I'm not sure if you guys watch Ozark, but he made a very important statement in season 2, and I don't know if I'm spoiling it for you. But he said an individual is an unpredictable creature. It's impossible to predict what any one individual can do. But when you start looking at the stats over a few thousand, hundreds of thousands, humans become extremely predictable, and we have patterns. And herd behavior is something that we can study and actually take advantage of. Now, in the beginning, I said there's a buyer and a seller, and when they agree, there's a balance and the trade happens. When we want to trade is when there's an imbalance. So we need to know when is there more buyers, or at least presume where more buyers would be, that it would push the price up from somewhere. And this is what we're trying to determine most of our trading lives. It's like when we come up there, do we think that there will be more sellers of Bitcoin up there? And this is a conversation and a process that you have to go through each day, every hour if you are trading hourly. That, let's say in 24 hours, it's not always possible to tell what Bitcoin is wanting to do, but now we're looking at a few days or close on to a month and a half. It's much easier to see that Bitcoin is stuck. It's not necessarily an up or down trend, and within that month we can see a downward bias, but it doesn't mean an overall downward trend that Bitcoin is going to fall off a cliff. So what helps me, and if I were trading the hourly, and in this case, I'm going to look for a trend line, and we can clearly see there. It, if we zoom in, it's almost textbook there. So we have our trend line, it breaks it at our closest above and literally shoots up. It doesn't get much easier than that, actually. There's also a channel feature somewhere here, parallel channel. Also, channels are a very good thing to trade as well. So if we go here, here, there, and we can see that from the bottom they went up there, down there, up there, down there, kind of lived there, up there, down there. I'm not going to say it's that easy to make the decisions at the time because it certainly doesn't live. Let's say we at this point that channel doesn't exist yet. We need a few ups and downs to determine that. And the only time you could really draw this is at this time. And you'd probably draw it a lot narrower. But then if you just extend it and let's say that part didn't exist yet, you'd have a framework by which to trade. Trying to see if we can determine the channel now. And let's say we go down to 30 minutes again. And we zoom in a bit. And we go for channel. Not exactly a very pretty one, but should price respect that channel, then for scalping or something, not long-term trades, we can then go short or wait till it hits here and go long. Right now, it's not the time to trade because we have a support area here and it seems to have bounced up. Please stop me if I'm going too fast. Yes, the recording will be shared on Telegram. I will figure out how because we're not using Binance channel, so it will either be a Google Drive link, but it will certainly be posted on Telegram. I just need to see the size and stuff and get it down. Should be by tomorrow. But the better way to look at these things sometimes, and TradingView does have the ability to play back um, history of price, so you can practice on these things. I I don't always know how to do that, but I know it's possible. And let's say we were here now, we have a little bottom there. We see a bottom there, a bottom there. So I know it's hard to kind of prove that now, but because we've had a touch there, a touch there, a touch there, that strengthens that trend line philosophy there. And we can then wait until, and we if we in 30 minutes, we want a candle to break a line, close below the line. Even better is when it retests that line, as you can see, more or less retesting. That's when you want to short. I would say if we in the beginning trades, we're only really worried about spot. And it doesn't matter if you make a few cents. A few cents is a few cents. So I don't trade with a lot of Bitcoin on exchanges, and I use margin to allow me to do that. So this is not what we're talking about today. So I'm saying if you have only 1,000 rands worth of Bitcoin, which is quite significant for most people, um, it's fine to just do this all the time and practice on these things because you're not risking a lot. And yes, when you make a few cents, you make a few cents. But if you consistently make that things, then you will build the confidence to be able to put bigger trades on. And one thing that the Bitcoin world, or at least cryptocurrency, see how it's bouncing up there, does afford us is to be able to trade unleveraged. And in forex markets and other markets, that is unheard of because the amount of money you need to be able to trade in a market is huge. You can start trading with 100 Rand in crypto and be okay with it, and you can still make money. It is not a problem. What also helps is if we get a horizontal line there. Horizontal line. I think if we extend that, they should touch at some point. That's what they call an ascending wedge. I will get the common patterns and share a diagram next week. I just want us to understand that trading markets is a conversation you need to have with yourself, and you need to reason what is the other person doing on the other end, or whatever algorithm. And smart money never buys high, and they never sell low. So in a case like this, what one has learned, if they really want to move the market higher, they first gonna push it down. That's when everybody sees, oh, the market is tanking, let's sell, 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 get out. That is not the time to be selling, especially in the spot market. So what? You're just losing on the rand side or dollar side. In the long term, if you believe Bitcoin is going to go up, just hold on. Maybe even buy more. And you can even see another little pattern that's always a bullish thing is the little W. It's no, we just need to break that. Is and this is a classic sort of smart money move, I would say. They push down, shake you out, push it up, give you a hope a bit so everybody buys in again. They sell it down again, but ultimately they want it up, yeah. And it can be repeated all the time again. And I wouldn't really say that they look at the 30 minutes specifically, but it's not like the major money looks at charts all day. We're just looking at the chart to understand their behavior after the fact. I'm just trying to see where. Oh, so we did support resistance, maybe add volume today. So obviously the volume is specific in this case because we are in the Binance chart. That is the amount of volume that exists within Binance. And you can see on this side, it's a ridiculous amount of Bitcoin. Anyway, that's for another day. There are other platforms that I can show where you'll be able to see how much buyers and sellers there are. But when we see a massive drop like this, we also see a big volume bomb. It stops there, rises up. Let's just zoom in a bit. Almost equal to that volume bar is the green bar. That shows you that that is an area that they're going to support. They don't want price to go lower than the 9,100 area. We see here again, for now, that is seems to be the respected area and price isn't going lower. We then see up and a bit of meandering of price. We can do horizontal line there again. If we do that, extend that one. And if you're into scalping, now you've got areas to scalp within. And these aren't small moves. So up there, 9475, down there, 936, 9358. Obviously, things like this can hurt you. If you are long, hoping for it to go up. So it's best to be quick about these things. If you're going to do scalping, figure out that this is a channel very quickly. You probably get that down. And if you're in luck, there you go. But once again, if you don't get out there, you shouldn't be selling down there. And massive moves like that, you just close your app and get out. Don't look at it. Next day, you're back up there again. And in history, Bitcoin has proven that year on year, from the beginning to the end, it will recoup, it will recover. And it's not a guarantee, but you know, one needs a bit of thick skin to trade, I suppose. That is almost it for today. I don't really want to go into the more in depth things of charting, but are there any questions? You can either text them or just open your mic. I guess no questions. I hear noise. Okay, back to Binance chart. So, just another little thing about Bitcoin and the specific exchange that you use. So, if we're trading in Binance, it's always good to be charting in Binance. And if you're using volume, use volume of Binance. And within each exchange, you'll see their own levels of resistance and their own levels of support. And they might not necessarily be like to the cent and dollar, if you want to put it that way. But trading within this exchange means that when I determine that that is, let's say, support, and you see little volume spikes there, that that's the area to trade. And let's say I was going long here based on, oh, it doesn't like this trackpad, that's why. Sorry, I'm a Mac user. I don't recommend that you follow my process, but when I'm trading spot, I'm not using stop losses because I'm trading spot. So I'm just moving between Tether and Bitcoin. One can do the same with other markets. Not really sure how to change that thing. Okay, so we want to go alts. Fiat, NFP, Ethereum. Where are you? There we go. And obviously, we need to understand the markets that we are trading within. Ethereum, by and large, is a lot more going for it right now because there's a lot of DeFi applications coming out. Also, Ethereum is supposed to be releasing 2.0, where they're moving to proof of stake. So a lot of people are trying to accumulate the 32 ETH, and that's pretty much been responsible for the upswing. Any downward swing is just market corrections, I suppose. And we can start our. We on 30 minutes. Let's go to 1 hour. We can start our looking for areas of respect. See there, sort of a similar spike to Bitcoin, up and down. And we'll put a trend line in. Maybe we even started from down here. And we can see it sort of respects that. We can then go down to 30 minutes and add more areas of support and resistance. No, I don't want that. That's another area down here. I need to see that that is respected. Yeah. So we see price behavior around there. Maybe move this a bit lower. It's not an exact science. It's not always to the pop or to the sense. You know, sorry about that. Get annoyed. So, from my outlook, I wouldn't say that we are out of a bullish bias in the long term. We are certainly stuck here on the smaller time frames in these areas, and if we determine that that is a support area, which we could before we got there, especially when you have these big falls, just go look in history where prices sort of congregated around an area, that tends to be a buying spot if we're coming down. And we are always wanting, we're never wanting to buy the tops. I'm quite fine with waiting for things to happen. So if we haven't reached that price, and this is where you need to do a bit of history, if Ethereum hasn't been there for a long time, and let's go to the daily to see. So we are there now. So since February, yeah, it's February, we haven't been over 250. So there's no real reason for it to stay up there long unless we're going to have parabolic moves up there. So you can almost say that if we're reaching new weekly highs, we can short. And especially when price congregates like that. So that's an area of indecision. Price hasn't taken the determined direction to go up higher. If it drops, the likelihood that it's going to drop more is probably more in our court than ever. We are now on daily, and we see a point there. I would say that is a nice support area on daily. But we aren't going to see 109 for a long time, in my opinion. So in this case, I would wait until that price hits that line again for my purposes. And it would be sort of putting the odds on my end that if that thing repeatedly touches that line, and you can see you can even extend it lower, still respects it, that if we come down there, it's going to respect it again. We go long, and then we've got levels up there to jump out on, where we can sell portions along the way. We will deal with that in another week. That is it for me. Thank you, everybody, for attending. The recording will be up tomorrow. Let's just see what the chat's.
Cool. Thanks, Lindy.
Okay. Until next
Yep.
week, then.
Thank you very much.
Thanks.
Cheers.
Bye, guys.
Bye.